Hello and welcome back to goldstocktrades.com. Today we have back here with us Greg Johnson. Greg is CEO of Wellgreen Platinum. Wellgreen can be traded as WG on the TSX Venture, and it also can be traded as WGPLF on the OTCQX. Thanks, Greg, for being back here with us today.
Great to be back.
Greg, you have decades of experience in the mining industry. Talk to us a little bit about the recent decline in the precious metals and the PGM market with the rising U.S. dollar. How do you see that over the long term playing out?
Well, I think the recent decline that we've seen in all these metals across the board is really an indication of the fact that these are all priced in U.S. dollars, that we've seen a short-term move out of particularly the yen and the euro, which in an inverse way strengthens the dollar. And we probably have also seen a bit of a flight to safety because the U.S. dollar is so liquid. And of course, as we see the dollar strengthen, these commodities that are priced in dollars, goes the other direction. So I think many analysts, based on fundamentals, have been surprised at how rapidly some of these metals have moved. But based on history, we would guess one that this move is moved quite a way already, quite quickly, and we're probably nearing the term where this will at least revert back towards a more median level. And secondly, that the fundamentals of many of these metals remain very, very robust, particularly the PGM space, where we've seen significant deficits in demand versus supply that argue for, in fact, higher prices in these metals. And so we think this has been potentially a very rapid, a very sharp sell-off that could likewise turn around, at least with a near-term bounce here at some point.
Greg, I was able to meet with you at the recent conference in Denver. Talk to us about the interest on the sidelines for mining equities, especially companies like you that have an advanced resource in platinum group metals.
Yeah, one of the things that's really interesting has been the evolution here over the last couple of years of new types of funds looking at the mining space. I think most people look at the kind of current valuations both for the producers as well as the development stage names, and there's no question that there's deep value being presented in the space, with some of the producers trading at less than 5 times earnings. And of course, development stage names always traded at a substantial discount to what assets that are in production trade at, reflecting the fact that they're not yet producing cash flow. And what's interesting is that the traditional players, the big mutual funds and others that were metals and mining specialists, were much less prominent than the presence of new types of investments, such as private equity style funds that had raised significant capital over the last couple of years and are looking for sectors like the mining space that are showing relatively low risk because these things are already compressed significantly, and real opportunity with a bounce. And one of the themes that many of these private equity groups and new investors are looking at is the idea that, particularly in light of the current global economic malaise, countries are going to have to continue to invest to bring in jobs and economic development, and that investment is likely to go into infrastructure. And for infrastructure, you need basic materials like copper and nickel and PGM for catalytic converters to go in cars. And these are fundamentals. It highlights the cyclical nature of our business, but also, I think, potentially the opportunity for those who are able to kind of buy straw hats in winter, so to speak.
Talking about the fundamentals, Greg, the management team, the new management team that came in 2012, you just released an updated resource. You're on the verge of publishing an updated preliminary economic assessment. talk to us about the management team, the years of experience, the decades of experience of development and operations, and what you've been able to accomplish since taking over the role as CEO.
Well, despite the market backdrop that we've just been talking about, it's been a very exciting time for us at Wellgreen. As some of your listeners, may be aware, we had a complete changeover in the management back between 18 months and 2 years ago, where myself, John Sagman, our COO, and Jeffrey Mason, our CFO, all arrived within, kind of a few weeks of one another. For us, the reason we were excited in the first place to look at Wellgreen was, here was already an asset of significant scale in a great jurisdiction. Canada's been ranked number one for mining in the world, and that, with that asset located, right next to, paved highway in Alaska, which leads to two existing deep sea ports, that this was an opportunity for our team to bring, our experience and background to work, which has included, a career with the major mining companies, Barrick, Placer Dome, Glencore Xstrata, Vale, among others, working on projects in the north, working on big projects and understanding, large assets and having been successful at driving similar types of situations to significant, shareholder creation. So it's been an exciting last couple of years. In many ways, Jeb, we've had just kind of a couple of very simple overarching goals that you could write down on the back of a napkin, and that has been to really build the confidence in the resource that would underpin these new engineering studies we've been undertaking. Our previous resource was about 95% inferred material, which is higher. It's less confidence, so you want to move by drilling and building a geologic model to a higher confidence level, which we delivered on very significantly with this update, which converted about 75% of our previous inferred material into measured and indicated, which is your highest confidence category, as well as adding whole new ounces that we grew through discovery of new ounces, particularly on the far east. In addition, we've had the benefit of being able to step back and utilize the data that's been collected on this project over the decades. Your listeners may recall that this project was originally discovered back in the 1950s when they were building the Alaska Highway, and then was put into production in the mid-1970s as a high-grade underground mine. And so we've been able to benefit from that work all the way back into the 1950s, work that was done in the 80s and 90s, 2000s, and to be able to, take and compile that information, benefit from the work done by those previous workers, consolidate the information into something that can be correlated, and develop a much higher confidence model that has significant refinements in the geologic understanding of this deposit, which we believe is going to make this ultimately into a project that will be a mine someday and that will add significant value for our shareholders.
Greg, the updated preliminary economic assessment is due to be completed quarter 4 2014. How is that on track? How is that going? And can you talk about some of the developments that you've done both on building the resource, the indicated, and improving the recoveries, and how that could impact the upcoming preliminary economic assessment?
Yeah, so we are working with our lead engineering firm is JDS Energy and Mining, and this is one of the top kind of independent entrepreneurial mining firms. So, right now they're giving us guidance that the study should be done in the fourth quarter. We're hoping that that's likely November, but it could very well be in December. So, we're not far away from being able to have those new studies, out. An important component, in addition to the resource estimate that I just mentioned, is this metallurgical test program. We just delivered a summary and assessment of historic and current work that's been done on the project, and really have built confidence in terms of understanding the different rock types that we have in our deposit. Some of those rock types we've gone to understand that those should be broken into finer differentiations and understanding of those rocks because they have implications for the recovery of the metals. We've also been able, with this higher confidence resource model, to understand which rock types are likely to be in the early part of the mine plan, and we've been able to focus in on those areas where the rocks that we have show the best recovery profiles. These, in particular, are basal components in the deposit, which have the highest grades in those, and so that understanding with our technical team to refine the geology as part of building a new resource model and constraining that resource model, gives us a high degree of confidence going into this new study that we've got something that is a solid platform to build these economic assessments on, and that will lead us to the next series of studies in the pre-feasibility to help advance this project, towards a construction decision.
Greg, the projects, Wellgreen's project, the project's located in the Yukon. Some of the concerns in the Yukon are infrastructure. Can you talk to us about the Wellgreen project and some of the developments that you've recently done with the being able to use liquefied natural gas and having road access and access to deep sea ports? Could you highlight the infrastructure at the project?
Yeah. So, in general, when looking at northern projects, investors do need to take into consideration the level of infrastructure that's currently available and what kind of infrastructure needs to be put in place in order for a mine to be developed. We're fortunate on the Wellgreen project in that, being located in the southeast corner of the Yukon right next to the highway, that the project has excellent access infrastructure. So unlike many projects in the far north, which must rely on ice roads and other, short shipping window type situations, Wellgreen, is very easy to access. It'll be easy to truck our materials to an existing port which handles concentrates for both Capstone as well as Alexco. And so we're well positioned in terms of that. As you mentioned, we've been looking at options on the energy side. We are, planning for this next PEA to look at liquefied natural gas as our base case energy supply, and then probably in an expansion phase to, build a power line to what is, the largest hydro facility in the Yukon as a second phase of expansion, but not needing to do that up front. We've signed supply agreements for liquefied natural gas with both Western Canadian-based suppliers as well as an Alaskan-based supplier that would be coming out of Fairbanks, and both these would be accessible by highway, to our project. The real benefits that come from that is that liquefied natural gas is about half the cost of diesel energy, which has been the standby, go-to standard for projects that are, in remoter locations. So it's not only less expensive, but it also is much cleaner burning. And so, for our company in particular, platinum's primary use and palladium's primary use is in catalytic converters for cars, for clean, kind of clean technology, if you will. And so it makes sense for us to emphasize an energy source which is clean, and with particularly if we're able to incorporate some of the heat from the generation of electricity into the operation, may actually be classified as clean energy.
Greg Johnson, CEO of Wellgreen Platinum, which can be traded as WG on the TSX Venture and as WGPLF on the OTCQX. Thanks so much for being here with us today and for giving us an update on Wellgreen.
It's been a real pleasure. Look forward to updating you again soon with these new developments coming out over the next couple of months.